Good afternoon. It's the last day of January 2022, and it's another opportunity for us to have a look at how the market performed and to have a discussion around the securities, being a Monday. I have a wonderful guest that is going to take us through some of the conversations we want to have around the banking sector. But before that, we will go to the market to look at the gainers, losers, and movers of the day. To start us off, we will look at the gainers of the day. Being current general, I observed that today they have done over 145% year to date, and it's still going up 9.72% change of the day in the positive direction, closing at 59.25. Trans-Century Limited did 4.84% upwards, closing at £1.30. British American was the other gainer at 4.46%, closing at 468. Bamburi Cement closed the day at 38.90, being 3.32%. And Standard Group was the last of the gainers at 3.03%, closing at 15.30. Let's go to the losers. Well, BOC Kenya led the day after shedding off 8.44% to close the day at 70 shillings and 50 cents. Home Africa Limited shed off 7.69%, closed the day at 0.36%. And here I was thinking that real estate is attractive. Flemtree shed off 6.87% to close the day at £1.22. Nairobi Business Venture has also performed very well over the year, but right now is correcting at 5.53%, closed the day at £4.95. Liberty Kenya was the last of the losers, closing the day at 6.66 shillings, being 4.86% lower. The banking sector has proven to be I think before that we go to the movers of the day. I'm excited about the conversation today. KCB Group led the pack at 5.58 million shillings. That's a lot of shares, million shares. That's a lot of shares, followed by Safaricom PLC, 2.87 million shares. Equity Group holding 1.4 million shares. East African Breweries is 874 shares, and followed by ABSA. It's strictly for the big boys today. Well, that takes us, I think, to the conversation. The banking sector has performed very well over the past few months, some registering over 100% performance. I think that was Equity last year in half-year results. Right now, we are learning that they have seen an increment of about 8.6% upwards in terms of private credit. It's an awesome conversation to have, and to join us in this conversation and to give us more insights, I'm joined today by Willis Nalwenge, Senior Analyst at Kingdom Securities. Karibu sana, Willis.
Thank you very much.
Always a pleasure to have you on board. What do you make of the movements at the market today?
Positive things. A few things that we need to note is that we are coming towards the period of announcements. So those are some of the things that are jostling the market. We've seen BAT coming up very well. We've seen a few counters which are very, very positive, which have the financial year ending on 31st December. EABL, remember that EABL released their half-year results last week, where they announced 3.75% dividends. So that's a definite market mover on that front.
That's why they're moving millions of shares.
Yes, that's definitely one of the reasons. On the movers, we know we've seen KCB moving about 5 million shares. Like you said, very good movement in that. In fact, it has beaten Safaricom in terms of movers.
Yeah.
So that's a positive thing. The only difference is now, my friend, is that unfortunately is more of a foreign exit, which is not good for any company compared to foreign entry. So that is.
So it was on an exit side, on the exit side.
And one thing again we need to note, for example, for KCB is that they issued do we call it a three-quarter interim dividend of 1 shillings last for period ending September 30th. Positive thing. We expect KCB to issue a full year dividend, and maybe our view is that they'll go back to their traditional 3.5 for the total dividend payout, which will tend to push the price upwards. So the market right now is being ruffled by any counters that closed the year in the last that is 31st December. BAT, we know BAT normally does the announcement very, very early, and we know that they pay out about approximately 95% of their profits. So anybody who's a shareholder in BAT, they're expecting good results in terms of dividend. That's the reason why the price tends to move upwards.
It's very attractive for some of us who are ethical investors. We might have an ethical dilemma going into BAT.
I don't know what's your view, considering that BAT is already taxed for the ethics that you're claiming for. Remember, BAT pays a lot of money towards controlling the perceived negativity. The moral tax, as it were.
So
if you have any other moral problem with BAT, please note that they've already paid for it and you need to buy their shares.
Okay, the All Share Index is up 0.64%. And just perhaps to make sense of it, does that mean then that we are now beyond or out of the January problems?
Not really. When you look at the counters that really moved that tick upwards, you'll see that they're mid cap and small cap shares. You've seen who are the movers in terms of gainers. Those counters don't move the market much. Remember, one of the big boys runs about 46% of the total market. Unless that 46% of the total market moves, then we won't see much. But if you categorize in reality of what is moving the market, then it's the small cap and the mid cap counters, which is not very good for the market, considering that, again, most foreigners do not focus on those
Absolutely.
So it's only beneficial to retail clients, which are
like myself,
trying to push Kenyans to do a little bit of retail, and institutional clients who have invested in those stocks.
I know you're an institutional client of yourself, and that is why you're probably more keen on some of the big players. But what small caps caught your attention perhaps now or in the past 1 week?
Insurance companies will remain one of the positive. Unfortunately for Liberty Kenya, the announcement about the 25% decline in profitability was one of the biggest reasons as to why there's been a price decline. But anybody who's looking at capitalization, capital gains on counters, it's not a bad counter to buy. The only thing you'll miss is that they might not be able to issue dividends this year the same as they did last year. So that's some of the things. They remain speculative stocks. Those I will not recommend anybody who does not have a strong stomach to go into that. Those are normally stocks we reserved for people who are looking for long-term investments and strategies that
and people with a large risk appetite, really.
Yes.
Fair enough. Let's get to it. The banking stocks are registering sterling performances, and we've seen significant growth therein. Any perhaps reason why this is the case?
Definitely. Last year, they're coming from a low base, what you call a low base performance. Remember that when COVID happened and the central bank government gave banks, sorry, this is 2020, I'm talking about 2020 and 2021. So last year being 2020, and then now 2021. I'm comparing 2020 and 2021.
Last year being 2021, and this is 2022.
Let me rephrase that. 2020 versus 2021. In 2020, when the government gave them a moratorium to do a reallocation of their loan, repricing of their loan, we saw that most of them got a hit in the loan loss provisions. Some of those loan loss provisions were up about 80 to 100% increase. So that has been reversed last year, and that's the reason why you saw some banks like Absa Kenya, which recovered about 384% in Q3 profitability. So that recovery is mostly attributed to the reversal of the loan loss provisions that happened in 2020. So most banks which had heavy loan loss provisions tended to have high profit growth. The likes of Equity Group, KCB Group, Stanchart, what's the name of this other bank? Absa, I've already talked about it. Those ones will tend to perform very well, especially in the year-to-year performance. The ones that were conservative in their loan loss provisions then will tend to have a little growth, what you call the normal growth on that. But the only difference is that in 2021, 2022 performance, you'll see that they'll perform better compared to the banks which released or had very high growth.
Yeah.
So most banks will tend to go back to the traditional growth momentum. And this is very much visible if you look at it quarter-on-quarter performance. If you look at Q1, Q2 performance, Q2, Q3 performance, you'll tend to see that most of these banks went back to their normal growth. So that will tend to reflect to the full year. And I'm talking about 2021 vis-a-vis 2022.
Could you, I know you mentioned this, but just for the purposes of our viewers, this loan loss provision, could you just explain what it is?
In simple terms, this is the approximation of any losses on a loan that a bank gives out that is potential when a client defaults.
Yes.
So they have to appropriate a certain percentage of the loan towards the probability of it being defaulted.
Yes.
So the higher chances, the longer the term of the loan, then there's a higher chance of probability of default. Then you have to put that amount. You also look at the client to client. Yourself and myself do not have the same risk base. So your provision and my provisions might be different. So it's just the probability of default that the banks have to appropriate towards that, and then it's normally taken as an expense.
All right. Let's agree that your provision will be higher, because I think your risk is higher than mine.
The good thing is I'm a good member of this society, so compared to you.
Okay. There was an announcement that the default rate for the Matatu and mortgage industries has gone up 60%. From what you've described, it's not necessarily operational profits. It's more of accounting profits because of a low base, as you put it. Should this worry us then that on the operational end of things, the defaults are too high?
When you remove loan loss provisions from those figures in your profit and loss, then you'll note that all banks' cost of expenses grew at a normal rate. So the key ticker there is the loan loss provision. The moment you remove that, then you'll find that these banks' cost of operation went up between 7% and 12%, which is normal growth, considering that, again, their top line is matching the 12 to the 7 to 12%. But the moment you throw in the loan loss provisions, then you'll see the spiking of the sharp decline in profitability.
Yeah.
So that we normally tend to remove that one line, considering that has an unstable factor in their approximation.
But there is still default, Willis. We are defaulting 60%. Forget about the loan, the loan loss provision. We are defaulting 60%. 60% of a loan book to the Matatu sector or the loan book to the mortgage industry. Shouldn't that worry me as an investor?
No, should not. Remember last year, one of the things that happened is that the capacity for Matatus was low. Some of those guys were not able to do transportation at night. There are those issues. Number three, so you already have capacity. Was it 75% capacity?
Yes.
Number two, you have no night travel. Remember, we had curfew till about 11. Those are revenues denied to these Matatu industry. So most of them will tend to slow down on their repayment. Remember that, fortunately or unfortunately, most of these Matatu circles are run through credit facilities. So that will tend to have a hit on that. But now that we are back to full capacity, we are back to night travel, we are back to no curfews, then those defaults will tend to decline. And remember again, by saying default does not mean that it's gone like that. The essence of default is that you're an inability to pay over a period of time. So it's either you recover in your operations and start paying again, or restructure your loan so that you're able to come back and repay the loan on amounts that you're able to. Again,
Absolutely.
If you are previously paying 10,000 shillings per month and you're not able to pay the 10,000 shillings per month, so the essence of it is you go to your bank, renegotiate, and maybe restructure it to be able to pay 3,000 shillings per month. So you see, that is not a default. The only thing is that your provisions or your risk has just gone up because the tenure of the loan has gone up.
Yeah.
Same to mortgage. Last year, some few things happened. Some people, employments were cut off. Some people saw half salaries affected. So when those issues are reenacted back to the economy, then we'll see that those mortgages and also those real estate loans default rates starting to edge downwards. And again, if you see that most banks tended to shy away from those particular sectors, meaning that they're able to mitigate risk on new loans. So that should be able to cushion any person who's going into those sectors. So it's not a risk per se, it's just how you're able to manage.
So you expect that there will be a turnaround on this by the end of the year?
Should be, if the economy continues on the upward trend.
I am holding faith that it will. What, however, is in my mind right now is moving forward. Some of these banks, I don't know. Let me rephrase that. The construction sector was still performing very well during the lockdown. And it is clear that banks were not giving money for some of these construction projects. But right now we are hearing there are defaults on the mortgage sector. Two questions. One, where is this money being used for construction coming from if the banks are not giving it? But secondly, if on the other hand then the mortgage exposure of the banks is this low, is it a point of concern that that money is not getting into the economy at a time that we want to encourage house ownership in the country?
Odhiambo, when you talk about mortgage, I'm assuming you're talking about me and you borrowing so that we can be able to buy a house. That's a very small market share for this particular country. We have about 25,000 mortgage accounts in this country, while one bank has about 9
those
million.
guys could fit into Nyayo Stadium.
Yes. So you see, that is a very small. The only problem is that, or the only question we need to note is that, what are the factors that lead to mortgage taking and what are the factors that lead to the default of the mortgage? The one key thing is that most people who tend to take mortgage are the salaried individuals. So any changes into the economy towards the salaried individuals, then it'll tend to have an effect on the mortgage sector. Unfortunately, last year but we know what happened to the employment sector, and those are some of the factors that will affect the mortgage environment. On the other hand, construction, we're talking about the high rise, we're talking about the road that is being constructed, we're talking about...
No, not the roads, just these high rise buildings that are coming up, whether commercial or residential.
What happened is that when you take a construction loan, and maybe I can take it out to it in the simplest form, they don't give you the 1 billion at once. Here's your loan, 1 billion, have it. They do it in phases. So when you're done with phase one, they come revalue, they look at the construction level, they see what's happening on that level. If you've met the terms as you had agreed with the bank, then they give you phase two money. So they just don't give you the full 1 billion amount. They might even be giving you 70 million for that particular period of time. So when they're saying that is money still going out, remember it's still in phases. Yeah. Yes. Now, unfortunately, when now they talk about default, they talk about when you finish the construction, and now it's a problem of repayment. And you've seen very well that across the country, or mostly let's talk about Nairobi, the uptake of these constructed units, whether it's offices or rental units, it's slowing down. So that will lead to a default system for this particular entity.
Why is it slowing down, if I may ask?
Because you and I do not have that income. Remember, the economy slowed down last year and contracted to about 0.3%. So those are some of the factors. The companies that were supposed to lease, did they go on leasing? The expansion that these companies were having, did they expand? If they did not expand, that means there was less uptake of space. Any company coming into the country, they have to take space. Did we have that? We already have a problem with anybody coming into the country. So those space uptake is what will affect revenue for these companies and what will affect the repayment structure. So maybe, for example, most malls, remember, they're giving a discount for about 3-4 months lease payment. Those are all factors that will go towards repayment of any construction loan. So any slowdown on that then will affect any default.
Fair enough. I hear my director saying that we need to go for a break, so we'll take a short break, and when we come back, we will discuss more about the banking sector. We will now look at them one after the other. We have a few stocks lined up for discussion. Don't go away.